Micron's stock just plummeted 12% in a single day, leaving investors scrambling to figure out if the memory market has finally reached its peak. This sharp decline has many wondering if the party's over for one of the hottest tech sectors of the past year. The memory market, which has been fueled by the insatiable demand for AI-powered devices, has been on a tear lately, but it seems like investors are getting cold feet. According to one analyst, most investor feedback continues to point to a skittish AI tape, which is basically a fancy way of saying that investors are getting nervous about the future of AI and its impact on the memory market. This has significant implications for the broader tech sector, as many companies are heavily invested in the memory market and are counting on it to drive growth. The uncertainty surrounding the memory market is also having a ripple effect on other parts of the economy, and speaking of uncertainty, President Donald Trump just declared the ceasefire between the US and Iran over, sending stocks tumbling and oil prices soaring. This escalation in hostilities in the Middle East has far-reaching implications for global markets, and investors are clearly spooked. The South Korea's Kospi Index, for example, just entered a bear market, which is a clear sign that investors are getting nervous about the potential fallout from this conflict. As global tensions rise, it's likely that we'll see even more market volatility in the days ahead. Moving on to another stock that's been making headlines, Adobes stock is looking temptingly cheap, but should investors take the bait? The company has become a polarizing stock in the face of questions about its AI future, with some investors wondering if it can keep up with the likes of OpenAI and other AI-powered giants. Despite the uncertainty, Adobes stock is still a compelling buy for many investors, especially given its proven track record of innovation and its dominant position in the creative software market. However, investors will need to weigh the potential risks and rewards before making a move. As we look beyond the US borders, it's clear that the issue of stock market concentration is hardly unique to America. In fact, many foreign markets are even more heavily exposed to individual stocks, which can make them even more vulnerable to market downturns. This is a major concern for investors who are looking to diversify their portfolios and reduce their risk exposure. While the US market has its own set of challenges, the situation abroad is often even more precarious, and investors will need to be careful when navigating these treacherous waters. Finally, in a surprise move, GameStop investors just cleared the way for a fresh attempt at buying eBay, which could have major implications for the retail sector. Shareholders approved a change that will let the video game retailer issue more stock, paving the way for a potential acquisition. This deal could be a game changer for GameStop, which has been struggling to stay relevant in a rapidly changing retail landscape. As the situation unfolds, we'll be keeping a close eye on the developments and what they might mean for the broader market. And that's all for today. Tune in tomorrow when we'll be exploring the shocking revelation that a major US bank is on the verge of a massive AI-powered layoffs, and what it could mean for the future of employment.